Okay, today we're going to look at our federal income tax. Okay, we've been looking at figuring straight time, overtime pay, different ways that I can get paid. But we all know that if we have a job, we're going to have taxes taken out. So our objective today is to be able to figure up the amount of federal income tax that's going to be withheld out of my check. Okay, some people refer to the federal income tax as FIT, the FIT tax. Okay, your federal income tax is money that your employer withholds from your paycheck to pay the federal government taxes, which are used for a wide variety of different things that they help support and put money into. Our withholding allowance, or what some people will refer to later on as exemptions, they are the exact same thing. Then that is the money that the employee supports. That's the number of people that you support. You get a certain amount of money off before you pay for taxes. Okay. Then your employer will take that money off. They will look and figure up in either the table method or the federal income or the percentage method as to how much taxes you would actually have to pay. Now, I kind of call your withholding allowance or your exemptions, which I will refer to later, as your tax-free money. That's money that you can take off your pay before you start paying taxes. Okay, and that's people that is living in your household that you are taking care of. That could be anybody that's living in your household and you help take care of them, your children. Sometimes spouses claim each other as an allowance. If your parents live with you, and you're taking care of them and providing them a roof over their head and things like, food and things like that, then you can count them as an exemption for you as well. So let's take example 1. This is a table method. Okay, so Carla's an actuary. She gets $425.88 for the week. She's married and claims 2 allowances for herself and her husband. And we want to know how much Carla's employer is going to withhold for her federal income tax. Okay, so when I look at that, we have basically 2 tables. We have a set of tables for singles, and then we also have a set of tables for married people. All right, so here's what I need to know from this question. I need to know that she's going to make $425.88. I need to know she's married, so I'm on the married table, and she's going to have 2 allowances. So $425.88. What you're going to do is you are going to come down this right here, and we're going to find in between these 2 things where that $425.88 falls. So if you will come down, $425.88 is between $420 and $430. She said she had 2 allowances. So follow that straight across. There's no allowance, 1 allowance, 2 allowance. So that is $14 that will come out of her paycheck for her federal income tax. $14. Meeting those conditions. So that when you're using your table, you get on the correct table, whether you're married or single. You find in the first 2 columns, you find where your pay is going to fall in between, this case, in between $420 and $430. And then you just follow that across until you get under the column where it has the number of allowances. Okay. So example 2 says that Dan is once again married, so I need to keep my married table. He claims 1 allowance, and he's going to earn $390.50. So I'm coming back to the married table. He's got 1 allowance, and I got to go find where $390.50 falls. Okay, so I'm coming down through here. $390.50 falls between $390 and $400. Here's no allowances, but they said they had 1, so they will be bringing out $18 for their tax. Okay. One thing about your table is everything's rounded to the whole dollars. Okay. In the percentage method, we could have cents coming out. So when you look at your paycheck for the federal income tax that's coming out, you can kind of tell if it is going to be a percentage method or if it was a table method, because a lot of your table methods will be whole dollars in most cases. Your percentage method is usually, could be whole dollars, but more than likely you're going to have some dollars and cents. Okay. So now then I want to quickly show you how to do the percentage method. Okay. In the percentage method, I've kind of laid out the steps. The first thing you got to do is get your allowance amount. So this number has recently changed in the last few years. But for us, we're going to say that every allowance that you claim is $63.46 for you. And then if you have two allowances, to know how much allowance amount I'd get, you just multiply the two things together. That's my first step. My second step is to take whatever I'm getting, my gross pay, and subtract these allowances. Take them out because I'm not going to pay taxes on them. And then my third step is to figure things up from using this table right here. Okay, so those are kind of the steps that I will follow. Anytime we're working for stuff with us in class, unless it specifically says different, we use $63.46 as our allowance amount for every person that you are claiming as a dependent. Okay, so let's see what we can do with this. So on the first one, it says Lance is going to get a gross pay of this much right here per week. Okay, so that's important. He's a carpenter apprentice. He's single. Now, the thing about this percentage table right here is you have to be single to be able to use it. They've got two allowances, and they're going to use that percentage method to figure out how much income tax. So this is basically kind of, a 2 or 3 step problem. Step one, I'm going to find that allowance. So I got $63.46. How many allowances did he claim? He claimed 2. So we're going to multiply 63.46 times 2. So he's going to get to take off $126.92. Step 2, this is his allowance amount. Okay. Step 2, we need our taxable amount. So we're going to take his gross pay, which was $393.23, and we're going to subtract this $126.92. So $393.23 minus $126.92. Whoops. This is going to give me $266.31. This is taxable. That's my taxable wage or my taxable income right now. Now then, on step 3, we're going to the table. I want to know where this falls in my table. So I'm going to go up here and look. Well, it's more than 51, but it's also more than 195. So he's not going to fall in this. It's over 195, but it is less than 645. So he falls in between these two taxable wages right here. So this is what we're going to do. We're going to take, and I know everybody in this level has to pay $14.40. Nobody gets an option to that. So we're going to do $14.40 plus. We're going to take our $266, how much can be taxed on. We're going to subtract this lowest amount in my table right here in the row that I'm in. So minus 195, and then we're going to multiply that by Now, guys, remember, make sure you are doing your subtraction first. If you can't type it in the way that I've got it wrote right there, then make sure you're doing your subtraction first and then do your multiplying. So I got to pay $14.40 plus 266.31 minus 195 is 71.31 that I'm going to be having an extra tax on of 15%. So 14.40 multiply your 71.31 times your 15%. That's another $10.70. So take your $10.70 and add your $14.40 to it. So my total tax is going to be $25.10. So it's a little bit more in detail about, dealing with things. It's a little bit more of a structured stepwise thing other than just looking at the table. Most of your businesses that are probably going to do the percentage method like this is probably going to be one of those that will just type your information in and figure it up, let the computer figure it up. But it is good to kind of know how to do that so that you will kind of understand where they're getting their numbers. So if it doesn't quite look right, you can always go back and ask them about it, because that computer that they're using or that program's only as good as the person that is operating it. Okay. So now then, let's do one more real fast. We can do this real quick now. Step 1. Let's see. Mitch is single. Woo, he's going to get 4 allowances, and this is what he's earning for the week. Your federal income tax is figured on a weekly basis because it can fluctuate depending on whether you work a lot of overtime or, you get off early a lot or, your hours got cut or whatever like that. Okay. So, and we're going to use the percentage method. So again, I'm coming back up here. Every allowance is $63.46. So $63.46 times 4. $63.46 times 4. He's going to get $253.84 in taxes, tax-free money. Okay, this is my allowance amount. Okay. Step 2, we got to have our taxable amount. So we're going to take what they make, and we're going to subtract our allowance amount, $253.84. So 587.94 minus 253.84. So they're going to have $334.10 that are taxable money. That's your taxable amount. So step 3, go to your table. I need to know where 334.10 falls. Well, 334.10 is more than 195, but less than that. So once again, I'm in the same row. This is where most people fall, most of the time. Sometimes I might fluctuate a little bit, but a lot of people fall right here. So we're going to have our $14.40 plus taxable, $334.10, minus this lower number in this row, which is $195, times, and I've still got to pay an extra 15% on that. So again, $14.40, $334.10 minus $195. There is $139.10 that I still have not paid taxes on yet. So that's going to be at 15%. So $14.40, $139.10 times 0.15 is Going to be an extra $20.87. So $20.87 plus $14.40. So I'm going to get a tax here of $35.27. Okay. Now, here's the thing. You are watching this at home. I'm going to give you a few problems to practice with. When I see you in class the next day, then bring back those questions and we will review and discuss and talk about, misconceptions, things that are happening, the reason why we missed this, those types of things. So make sure you're jotting down your questions so that when you're with me the next time, we can specifically address those as a part of our class to make sure that you do understand. Okay? So good luck, and I will see you soon.